Have you looked into the abuses of offshore tax havens, abusive tax shelters, and if so, what have you found? Mr. McIntyre?
Well, I think you put your finger on probably the most serious problem in our tax code today, in our subsidy system today. And on the corporate side in particular, because there's individual issues of hiding income and there's corporate issues of artificially shifting profits. And I think that's the second is your major focus there. The reason that happens, that we let it happen, is two. First, we have this extraordinarily complicated system of how companies allocate their expenses and their revenues. They have to pretend when they're dealing with their wholly owned subsidiaries offshore that they're dealing with an unrelated third party, and they just make stuff up, and the IRS can't police it. But that problem, by the way, would be trivial, absolutely trivial. This arm's length of pretending you're negotiating with yourself would be a trivial and almost non-existent problem were it not for the fact that if they can shift that profit to the Cayman Islands or wherever, then the tax that ought to be paid on the income is indefinitely deferred. If we got rid of that deferral, then it wouldn't do them any good to move it to the Cayman Islands, and the problem would be solved. Now, there are some people in Congress, I know, are many business lobbyists, I'm sure, who are calling for Congress to make this problem worse by saying that not only can you defer what you shift to the Cayman Islands, you can be exempt forever on it. It's called a territorial system, or as one of my assistants calls it, a territorialism system, because it would make it's like a terroristic attack on the Internal Revenue Code. So, as you go on in this, and it'll come up for you in the Finance Committee, there's going to be a lot of talk. What should we do with our current system? Should we try to do what John Kennedy wanted to do back in the early 60s and get rid of deferral? Or should we go to what the Europeans have done, which is go to this territorial system, which has turned out to be a disaster for them and would be a disaster for us and would make your building down in the Cayman Islands have to add a very large annex?
Let me ask you this question. Have you done any analysis on how big the revenue hemorrhage is from offshore tax havens?
Well, on the corporate side, the Treasury Department has been doing a somewhat better job of putting a number out. A lot of this, the estimates have been bootstrapped. Some reporter will ask me how much, and I say, I don't know, 70 billion. Then somebody reads that and says, well, I'm going to raise you. But Treasury has made a serious effort. They peg it right now at about 50 billion, but I think they're leaving something out. So the numbers you gave, could it be 75? Could it be 100 a year? I think it could. But they're at least getting it up there because if you look in their latest tax expenditure book, you'll see it. And that's a big piece of that $365 billion in corporate subsidies.
Are we condemned to a race to the bottom in which corporations end up paying essentially no share of our national revenues and the entire burden is on individuals? That's a big change from a history during which America was a pretty strong economic power and that has lasted 75 years. Mr. McIntyre?
Well, I mean, you're absolutely right that the race to the bottom is what's going on in the world today. And if it's going to be stopped, it's going to take some leadership from the United States. The other countries aren't happy about it either. They're losing revenues that they use to pay for the public programs that they're cutting instead that would help their economies a lot more. But we have been the instigator of this for a long time. They blame us for the race. And if we were to lower our corporate rate, they'll just lower theirs more. And it's one of those things that we got to get together, just like the states need to do, to get together to stop profits moving into the low-tax states. And you worked on that for years, Senator Conrad. But yes, it's absolutely a critical problem, and the answer is not to give up, which I think is Scott's advice, but rather to take the steps that we need to do to get with our trading partners and work out a way that we can all collect some money from the owners of capital.
But Mr. Green, Senator, Mr. McIntyre, of all of the countries in the OECD, is there any that does not provide health care to all of their people as a right of citizenship?
They all do.
They all do.
And they give it to them for free.
Oh, my word.
And yet those people, despite the fact that they could spend every day of their lives in the doctor's office, should they so choose, don't.
I'd like to start with Mr. McIntyre. I really like looking at the reality of the situation. Who, in effect, pays the corporate income tax? When corporations view the tax as a cost, just like in my business I view resin prices as a cost, who, in effect, pays that corporate tax?
The shareholders, in my view.
You don't think it's the consumers of the product?
Absolutely not.
Mr. Hodge, what would you say?
I can prove that to you if you want. There's many, many companies in this country that argue for replacing the corporate income tax with the tax on consumers. It seemed to me a waste of time if it was already a tax on consumers, so I can't understand why they would make the effort.
If you're a corporate manager, let's say from a different country, if you're looking at investment decisions, why would you spend an extra $1 billion to invest in the U.S.?
Well, there's no doubt that some companies have advantages in low wages or that they provide other benefits that make it cheaper to do things abroad, and there's not too much we can do about that. My point is that we probably shouldn't be paying our companies to go there. So if there's a tax advantage in China, I'll take your word for it. We could solve that problem by getting rid of deferral so that the Chinese profits would be taxed at the same rate as if those profits were earned in the United States. So, yes, if that's a problem, my solution solves it.
I'd like you to speak to that basic fact. I mean, as much as we would like to believe we could raise 21% GDP in revenue by a different tax regimen, how realistic is that to actually occur?
Well, we've done it before. In fact, the only times we've ever balanced the budget in the last 50 years are when we did it. So
there's in the 2012 budget, President Obama's budget, there's only 3 years where we actually collected revenue greater than 20% of GDP.
Right. I'm saying the last time we balanced the budget was in the Clinton administration when revenues went up to almost 21% of the GDP. And back in the 60s, we balanced the budget briefly when it was about 20% of the GDP. All the other years in between those balanced budgets in Clinton and Johnson, different Johnson, were places where we had lower revenues and unbalanced budgets.
But don't you acknowledge the fact that taxpayers simply can't reorganize their affairs quickly enough when you increase tax rates? It just takes a little while. You are able to snare a higher percentage of GDP when you increase taxes, but eventually that benefit falls off.
No, I don't think that's true. And I think what happened, and it's very clear what happened to the corporate income tax, is that members of Congress are either cajoled or threatened by the corporate lobbyists to give them back their loopholes, and then every once in a while we have to clean up the tax code again. It used to be on a 15-year cycle. We missed out on the 2001 one due to a difficult election decision. But we are overdue to clean it up again. And yeah, it's kind of like the Medicare rules with the doctors. If you don't change them often enough, they'll understand them.
Well, first, I'm totally supportive of slimlining this tax code. It's absurd.
Yeah.
70,000 pages.
And I'm not talking about raising tax rates. You know, I'm talking about probably cutting tax rates a bit to make it more palatable. But all these subsidies we have in the code, don't we believe in free markets at all anymore? And gee willikers, the companies come in with the same story, and you guys fall for it every time. The 2004 American Jobs Creation Act. They came in and said, look what's going to happen when you give us this thing. General Electric said, give us all this stuff. They wrote half the bill, and we will create jobs in the United States. What did they do since then? 32,000 fewer jobs at GE in America, and jobs are up overseas. So, yeah, I mean, you can fall for it or not.
So I guess I would just throw out to the group, do we at least have a consensus here, although differences in terms of how to do it, that we do need, at a minimum, to lower the rate, reduce the number of preferences, and therefore have a more competitive tax system on the individual and the corporate side? Throw it out. Bob.
Well, I think we should reduce the rate a little, just so we can get some political support from the high-tax companies to pass it. But if we get back into the race to the bottom with Europe, rather than moving to a system where we protect jobs in the United States by getting rid of deferral, this won't stop. It started a number of years ago, and it's a problem for everyone in the world, and we need to stand up and say to the other countries, let's talk about this. It's not working for us, and get a system where we can get some tax on income from capital. And we're not getting it now, and that is bad for the fairness of our society.
Mr. McIntyre, same point. Not repeating the lame duck drill of 2010.
Oh, well, I hate lame ducks, but if you asked the question whether it's urgent to do tax reform as soon as possible. I would worry about that, because I cannot imagine a bill that could pass the House of Representatives that you and I would not hate. If you can persuade me that you can persuade them, then my urgency level goes way up. But right now, it's not there.
Fair enough. What's your sense about how we might, because it was a lot of your creativity that brought people together in '86, what might unlock an agreement in the future on this issue, starting with the person in the supermarket all the way to American business that has been concerned about competitiveness and how you might bring a new consensus together?
Well, I mean, what's important to understand is that your proposal to get rid of deferral and tax worldwide income of corporations addresses the problem of subsidizing foreign investment. Because wherever you move your money, whether you artificially shift it to the Cayman Islands or you really build a factory in China, you'll still be subject to U.S. tax. And if you pay taxes to a foreign country, of course, we won't tax you twice. That addresses that problem. The company's retort is that, well, yeah, but you want us to go to China. Now, I don't understand why we want them to go to China very well. They have this argument that for every 10,000 jobs they create in China, 300 are created in the United States to manage the business in China. But I'd much prefer to have the whole 10,000 here, personally. And so their idea that they have to be competitive with a German company in China, trivial at most, although that's what they make as the argument. So if we're talking to the person in the supermarket who wants to know why we're paying companies to go offshore, I'd say, well, yeah, Ron Wyden's going to solve that. Now, he has another thing he wants to do, too. He thinks that we should have a lower rate if you do business here in the United States. And he and I have an argument about that, because I think it's more important for American business to get the benefit of the public services that they need, the roads and the schools and everything else. That will make them more competitive with the rest of the world by doing business here in the United States and giving them a few points off their corporate rate. And you say, well, Mr. McIntyre, why don't you just tax the poor people to pay for these things for the businesses and give the businesses lower taxes? And I say, well, that makes things unfair. And plus, I don't think the public would tolerate it. So this is a discussion you and I've had a lot. But the number one thing that I admire so much about your plan is you take away the incentive to move things offshore, which just automatically says now you have more of an incentive to do it here. And so if you want to provide a little bit bigger one on top of that, okay, but remember, that comes at a price.
What are your thoughts with respect to having a system that has a consumption tax component as part of the base?
Well, we already have one, of course. The states have sales taxes, which these days run around almost 7%. So we have consumption tax as part of our mix. It's in some ways unfortunate because those taxes are so regressive. And every plan I've ever seen to try to deal with that regressivity is a failure because it's so hard to do. Mike Gratz's plan, he does not take 100 million people off the tax rolls. He just has 100 million people filing for tax rebates against their consumption tax. But they have to file the same income tax return they do now, pretty much. But anyway, yeah, no, I think, people say, well, I don't understand. Let's suppose we were talking about a value-added tax. And some people say that would be a great idea. And I say, look at them. I look at them and I say, why? If you want to make the income tax less progressive, you could do it. If that's your goal, to have a more regressive tax system. But why would you set up a new bureaucracy that estimates say would have double the size of the IRS to collect this tax just to get a more regressive system? Now, they may have other arguments besides the fact that they want more regressivity, but the ones I've heard don't hold water, so I am strongly and probably irrevocably opposed to adding a federal consumption tax.